Welcome into a brand new episode of WSI TV. Enjoy the show.
Hi guys, welcome back to WSI TV. Today we are going to be doing another market update for you. So I am of course joined by Jim. How are you doing today, Jim?
Good, thank you for having me.
Awesome. So before we get into it, this is going to be our last market update before the holidays. But before we get into that, I do want to remind you that you do need to go to WSITV.com, sign up for the instant daily newsletters that we put out every day, and you get instant access to all of our free content through there. So let's just go ahead and get right into probably the largest news story from last week. The president was impeached, and do you want to talk a little bit about what that means for the market?
What it means for the market. Well, here's a good point. I mean, this is where you see this disparity between what's going on in the real world and what's going on in planet stock market, and the stock market is supposed to like certainty. It typically doesn't like all the upset and disruption. So there is, you would expect something like that to have some kind of dampening effect. But this is really, what you're seeing in fact is quite the opposite, is that last Friday the market went up higher when it was already very high and extended on a lot of volume. So there's a lot of conviction in this market as well. So when you get something like what should be bad news for the market and the market actually goes up, that's really a testament to our thesis, which began on September the 9th, that says this is a strong, brand new bull market. When the market responds bullishly to bad news, that's a strong market. And going into an election year as well, there should be all this uncertainty that doesn't like. Instead, it's just all, guns blazing at this thing. But obviously, impeachment it's a process. It may not go anywhere, and it's got to go through the Senate, which is Republican dominated. So, but it makes a great headline, and it's all going into an election year. Obviously the Dems want that cloud over. It's all just tactics and game playing, but it also ties into what we're always saying here, which is, the market just does its own thing. We ignore all the noise and the chatter. What we do look at though is that we're always looking at what the market itself is doing instead of trying to second guess the market. And when the market reacts well to something that should be bad, then we pay attention.
For sure, yeah. And we do want to say, of course, we're not a political news outlet here, but just to kind of clear the air, the difference in the history of the stock market with impeachment proceedings is it's kind of supposed to be independent of what's going on on Capitol Hill, essentially. The market is supposed to reflect the economic standards of things, not the politician that's in the White House. So if you're interested in anything like that, Jordan and I actually did a full episode on the past impeachment, how it impacted the stock market at the time. But I think that's an important point to make, that it is not the end of the world right now, even though you may be hearing that somewhere. Right.
I mean, and market is a very, very singular weighing machine. All it cares about is numbers, how are things going, and more importantly, what does it see ahead in terms of those numbers, and it clearly likes a lot. And what it may have been forecasting all this time since we saw it turn bullish again, I think is something else you want to talk about, which is the Chinese trade deal.
Yes, we do need to discuss that. Last week, I believe, President Trump and China's president did come to the phase 1 trade deal agreement, which is just step 1. We've said it multiple times already, but that's got some things that are entailed with that, if you want to.
And you can see how the market is clearly preferring to look at that news rather than something else. And there's that case in point of, look, it's all it cares about is the numbers. A possible impeachment or not, don't really care. Chinese de-escalation on trade, that's what the stock market's all about, is business, profits, and the numbers. And so de-escalation on trade is going to be, good news, which has clearly superseded the bad news as far as the stock market's concerned. And which I believe, if I'm interpreting the story right, this is generally a de-escalation of both sides on the whole. It was never a trade war anyway, but a de-escalation of trade, escalating trade disagreements that are now simmering down. Which coming to an election year is obviously going to, Trump's going to be pushing for that, and that's helped him. And the stock market likes that. you know.
For sure, yeah. And I think you were talking a little bit about kind of the nitty-gritty details of the deal. There is one line that we do have here that Beijing will increase the purchase of U.S. goods and services by $200 billion.
Right.
But that does have some implications for imports. And I think you wanted to talk a little bit about that.
Yeah, so as I understand it, then that basically makes, it's always been a bit unfair. I mean, Trump has really not been, just trying to cause trouble. It's been quite unfair in the favor of China for a good long while. Nobody did anything about it. So he's only really doing rather late in the day what should have been done before. And what you're seeing now is a fairer trade agreement where if China puts tariffs on the American imports, then America put tariffs on Chinese imports. More of a balancing, more of a fairer situation. So that has to have. So how does that? Why do we care? Well, that has to have an impact on America's exporting companies. If you're an exporter and China is, for example, putting tariffs on your goods, that's doesn't go so well. It's well in your favor. And the exporters have always been hurting for a good while now because the dollar has been in an aggressive uptrend for a long while, for months, and with no sign of slowing down. And that's going to hurt exporters without having a strong dollar. So this will. But despite that, obviously the stock market has been doing very well. So if you're a big exporter company, particularly like the likes of the giants you see in the Dow Jones, then that's got to be a nice bit of relief for you from that strong dollar position, trade going more in your favor.
For sure, yeah. Those are some great insights on the trade negotiations, which have been populating headlines for, it feels like forever now.
Right.
But, so I think we're going to zoom in a little bit now. We do have an upcoming episode later this week about retail. Leah and Jordan are going to go really in depth about the retail sector, but we are going to talk a little bit about how the retail apocalypse has kind of been a fake news headline.
Okay, that's actually a headline, isn't it?
Yes.
The retail apocalypse.
The death of retail.
Okay.
Yeah, so
Well,
we're going to go super in depth with that, but
Right. But so I mean, yes, it's interesting how they keep harping on about this one theme. I mean, it has become you'd think it'd be a very retail dependent bull market, but it's not actually. It's based on corporate debt, not retail debt. That's what's been powering this, rightly or wrongly. That's what's actually powering this market. So they're barking up the wrong tree and creating sensational headlines because that's what sells ad space. And the overall market, as you can quite clearly see, is really up and away since we've been saying since September the 9th. So once again, this is what happens if you listen to the mainstream media. They're completely leading you, in the wrong direction. It's all very much just about creating fear. Fear gets your attention, But one thing is, the irony is, of course, if you keep saying these headlines long enough, retail apocalypse, recession, and so on, then people becomes a reality because then they start not spending and so it's not only fear mongering, it's also potentially damaging.
For sure, which hopefully it didn't do too much impact this year. Holiday spending's been on an uptick since 2010, which obviously is going to close out the decade just in a couple weeks here, but we had an estimated $87 billion spent just on Black Friday and Cyber Monday of 2019. So hopefully those numbers are kind of going to.
Yes, and clearly the market didn't. Yeah, right. Yeah. So that's a great point.
Yes. But then I think we were just going to capitalize on the general market. If you just want to talk about.
Yeah. So the market is. We called it on September the 9th. So it's a brand new bull market. It's been powering higher and higher ever since. I did say that once we got through spooky October, we would be into that November-December season, which is historically, a bullish time, and the market has not disappointed that historical forecast. Where does it go from here? Well, it's a very extended market right now, but that doesn't mean it's going to go down anytime soon. We have what's called the Santa Claus rally that's in effect right now. Interestingly enough, I think it's like the 22nd of December or around those sort of dates has historically got some ridiculous chance of the market being up. Oh, wow. Just on a probability basis. Not that I play that, but so the market was already extended, but it's still going to enjoy the Santa Claus rally. Will we have a January hangover? We'll have to just wait and see. Yeah. But I'm certainly not going to predict that or get in the way of that. I want to see a healthy correction. We want to see a return back to this red line here, the 40-week, to keep the thing on the rails, and not have a repeat of actually what we saw a year ago, actually in 2018, which was this extended blow off here, and then we had this drop, but it stayed on track for a bit for a while. So it's bound to be a choppy year because it's an election year. Every time one of different candidates get ahead and the uncertainty, so we're going to see some volatility, especially if we have a January hangover. sectors I'm keeping an eye on in 2020 are a knock-on effect actually of this whole Chinese trade disagreement settling down. If it's the housing market, keep an eye on home builders, raw material sectors, things like that, because they're bound to have a positive effect from Chinese goods. The steel, the concrete, a lot of it is imported to build homes. Yes. So that is going to relieve that and give more profits on the home builders' bottom lines. So and historically speaking, the cycle tends to it's going to favour real estate in those times. The administration is going to be wanting to create nothing but all happy, good news, free money for everyone. Everything is good in Trump land for this coming year, because that's just the game they're going to play. That's bound to have an effect on, hopefully, on the positivity out there, the feeling of the bullish feeling and people spending, which and low interest rates. All the things are kind of aligning for real estate right now.
Awesome. Well, I think that was your outlook at 2020. Before we sign off, I think we just want to wish everyone a happy holidays.
Yeah, have a great Christmas. Thanks for tuning in, and we'll speak to you afterwards.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.